Hey, what's up, good people? How you doing? This is Stock Up with Larry Jones. Been traveling, good people. I've been traveling, and I'm just going to give a brief update on the market. Okay, as you can see, I'm not in my studio, so if you're new, go ahead and hit the like, subscribe, and notification bell. I'm here in sunny Southern California, and this room is so bougie. It took me 5 minutes to find the lights. Anyway, listen, I just want to just briefly go over the madness of what's happening this week and the continued sell-off, this massive sell-off. S&P 500 down. The Dow down another 543 points. S&P down another negative 73 points. It's just been a straight dive down. Remember how I was making those videos of we get these bounces up and everybody think we're in a clear, and then here comes the downtrend. Of course, tomorrow we have the job reports, okay? So what I'm gonna say is this statement. Don't look at what the market is showing you. Listen to what it's telling you, right? Took a few notes because I just wanted to get this up as soon as possible. I know the bell has closed, but I just got here after a 2.5 hour drive. All right, but don't look at what the market is showing you. Look at what it is telling you, right? It's screaming that it's going lower. The market is screaming that, and we have these bounces and everybody gets excited, right? And so there's a lot of us that's been out there saying, hey, it's coming, to the point where I know you guys are tired of hearing it. But I feel like it's my duty to keep screaming caution. I dare you to find anybody on YouTube that has been screaming caution more than I have, and as long as I have, because this is a game of patience, good people. I'm looking at Tesla. I don't know where it closed at, but earlier today it was down. It's down 10% again. From its highs, down 10%. So if you got in, at 105 or whatever, you're doing good. Now you're starting to worry. Okay, am I going to lose all my gains? But if you bought at 210, now you're going, it's one of those things where patience pays, right? And I just wanted to say this. I want to say this: whether you're a technical trader, fundamental trader, whether you're on CBN, Fox News, whether you're on YouTube, whether you are Yahoo Finance, it doesn't matter. This market has proven you wrong. It's proven us all wrong. Let's just tell the truth. Let's tell it what it is. And it's not our fault. This market, we always say, the catchphrase is this time is different. And we always say, no, it isn't. No, it isn't. For year after year after year after year after year, we have to use the tools that we have to try to predict what's going to happen so we can make a buy or a sell on stock, right? So you only buy a stock because you think it's going to go up. Now, you either see something technically, hear something fundamentally, or you hear some news, right? Well, this year so far, everything has lied to us. All of the data has lied to us. Technicals have lied to us. Fundamentals have lied to us. Short term, okay? And so this is why in this market, patience pays. Patience pays. I took some notes here. Where is that at? Let's look at this. So in a bear market, I'm reaching back and forth. In a bear market, look at this. Interest rates going up. Banks have performed horribly. Recession plays. Precious metals have performed horribly. Energy has performed horribly. Ulta had good earnings. They just reported, had good earnings. And what happened to the stock right after? Going down. And that's because this is a Fed-governed market right now. Fed. Everything is just scared. The market is scared of the Fed, good people. The market is horrified of the Fed. And so tomorrow we will see, is this an overreaction? So Larry, do you think it's going to be, you think the job numbers are going to come in where it's low unemployment or high unemployment? What do you think? I don't know. I'm waiting until tomorrow. Larry, are you playing the SQs or the TQs? Nope. I'm not playing the VIX. I'm not playing any of the Qs. I am just sitting still and waiting on this market, because this market, I don't care who you are, will make a fool out of you. One of the things that I've been doing that I've called correctly is I've been staying mostly cash. There's a flight to bonds right now. You know, if you guaranteed over 4%, then that's where a lot of big money is going, and a lot of you guys are flying to it. I like defensive stock. I like a little risk. But the truth be told, I'm still mostly cash. And I suggest to all my family and friends, remember, anything I say is not a suggestion for you to buy, hold, or sell, still to stay mostly cash. Don't be in fear that you've missed the bottom, right? And we could come out of this and unemployment could tick up, the market could go green, and we can have another bear market bounce. These are some of the things that could happen. Or it could go the other way. So now we know in the past, if we had good jobs, that equals bad market, right? But the last time we had good jobs, meaning low unemployment, the market actually went up. It actually went up. So it's everything is topsy-turvy right now, good people. And so how do you make a plan in this? How do you plan? How do you protect your gains or stop the bleeding of your losses? Be patient. Just be patient. Like I said, if we have yet another leg down tomorrow, and tomorrow being Friday, and after a week like this, with all of these moving parts, it's just not good. And so I just say have cash. Now, I will tell you, for those of you that are new, I'm going to tell you how this normally goes. You get beat down, beat down, beat down. And then when the market does just finally bottom out, you say, this thing is broke and I'm just pulling all my cash out. And I'm going to tell you that's the wrong thing to do. When it gets beat down, beat down, beat down, bottoms up, and then shows that, hey, it's at least stabilizing, then that's when you should be going in. Me personally, I'm telling you guys, like I've been saying, I want to at least see Q1 earnings of this year. Data we getting from last year, that don't matter to me. I want to see what Q1 earnings of this year. That's why Ulta went down. They beat on earnings, they had all of that, but they stressed that they don't see the future being as robust as the past. And so if we start having all of these companies giving lower forward guidance, then that's not good for the market. So I want to see, are we going into an earnings recession? Because right now, the PE of the overall S&P 500 is still high. Those are the facts. And so this is a time to be patient. As you guys know, last month I got in, made all of those play after play after play after play, did all of those options. You guys saw me, in a week hit over 40K, right? I ain't doing that right now. It's just too risky. And even when I bought energy on yesterday, I'm buying like one contract. I'm not going crazy. I'm not going crazy playing the VIX. I'm not doing the Qs. If you are, then I pray and hope you make money. But in this market, like I said, this market will make a lie out of you. Just when you think you got it figured out, you zig, it zags. What else I got? Banks are not doing well, and regional banks are getting spanked. But I remember back in 2009, after the worst of the recession in 2008, I made a ton of money in regional banks, and I went back and checked. I spoke about it the other day. When I checked, it was 2009 when I made good money off of regional banks. So it was after the worst of the market when it bottomed out. So they're getting spanked right now. And a lot of these stocks that are getting spanked are the ones that are going to do well. So Larry, what are you really looking for before you could really start going into the market heavy, I'm looking for, the truth be told, I'm looking for 2 quarters of earnings, right? Now, I believe we will get a peek into the future after Q1 earnings, which should be in April. So we got January, February, March. Q1 of this year's earnings should be coming strong in April, right? That'll be one thing. And then we have to see what GDP for Q1 is, right? Then the second quarter, right? So we have to be 7 months in to see where this market is going. But I believe for some reason, we will see a peek into where this market is going to be for this year after Q1. And then Q2, so I might, depending on the data, I may go in. And then after Q2, I'm going to make I'm going to make my decision. If Q2 bottoms out the market or shows it's a downturn, then I'm going in even heavier, and I'm not going to worry about it because I'm not trying to time the bottom of the market. I'm trying to see, is the market going to stabilize? And I want the overall market PE to be at least fair to below. Actually, it being in a bear market, the price to earnings should be low, making it a value play, the overall stock market. And so to really win in this market, you cannot just buy entire sectors. You need to be a good stock picker, okay? So what we're going to do, you guys know I normally come live with the jobs. I won't be able to tomorrow, but I will be coming to you tomorrow and tell you what I think. And sometimes being a good investor is just sitting still, all right? Now, what I'm going to end with is you guys need to be studying. What am I doing? And I plan on doing this for the rest of this year. I'm studying the thing that I'm not the strongest in. I'm studying charting. I'm actually studying Stocks with Josh's charting chapter in my class. And if you don't take my class, which is the cheapest out there right now, so it's going to be on sale probably to the end of this month. So it's the cheapest out there, period, for what you get. But if you don't take my class, that's fine. Just do some studying. Study what you're weak in. This is the time to be studying. And hold some cash. I still say 75%. Hold some cash and start studying. If it's fundamental, studying that. If you need to learn how to read a balance sheet, study that. That's also in the class. But if you just want to, hey, you say, hey, Larry, I don't want to take the class, then search for the free stuff. That's all on YouTube. But study, 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 because at some point you're going to have to get in this market. I believe that this is a market for people that are going long, meaning that you plan on keeping your money in the stock market for a minimum of the next 7 years, 5 to 7 years minimally, and then you will win. But when will that opportunity be? And I believe Q1 earnings of this year will let us know, okay? And tomorrow we'll talk about the Fed funds rate. Are they going 5% or 6%? Will it be 600 basis points or 500 basis points? So now we're talking about 6% instead of 5%. We'll talk more about that on tomorrow. All right. Hey, if you are new, hit the like, subscribe, and notification bell. I'm traveling, but I want to keep you guys posted. All right. Make sure you check out all the links below, especially the class. And we'll see you tomorrow. Live, love, laugh, and learn.